Hi guys, welcome back to my channel. Kelvin here. You know the market is bad when you keep seeing that same trader guy appearing in every news article. His name is Peter Tuchman, by the way. Since the start of this year, S&P 500 has fell by over 18%, Nasdaq 100 down by almost 27%, and of course, Tesla has dropped by over 40%. Ouch. But Warren Buffett has once said this: I like to drink Coke. Just kidding, he didn't say that. What he really said was, be greedy when others are fearful. Which means that right now, when there's extreme fear, it's time to be greedy. So, in this video, I'll tell you how to invest in a recession so that when all this is over, you will what big. Before I start, I would greatly appreciate it if you can help to tap the like button. In return, I will show you a man punching a kangaroo. Alright, let's start right now. Let's start with the basics first. Savings. When times are bad, you need to prepare for the worst to happen, like touch wood, losing a job. The general advice is to save at least 6 months worth of living expenses as your emergency funds. So, for example, if your money expense is $1,000, 6 months will mean you save $6,000. So simple! That way, if something bad ever happens, you won't have to sell your stocks just to survive. However, the problem with holding cash is that the inflation will come and eat up your money. With US inflation hitting 8.3%, it means that our money is losing value at 8.3%, and that is bad. So don't just let your money sit around and do nothing like a lazy bum. At the very least, put some of your money in a high interest savings account like DBS multiplier, where you can earn 0.5% interest. It ain't much, but it's honest work. Then what you can do is put the rest of the money into a cash management account like StashAway Simple, Safe Cash Plus, Singtel Dashpad, and Singlife, all of which can give around 1 to 1.5% interest. But just take note, while they can give higher interest, the downside is that it will take a few days for you to withdraw your money. So only put money in cash management account if you don't need that money, like immediately. CB has a full list of cash management accounts which you can go check them out. Second, CPF. Now, I know what you're thinking. What? CPF already take 20% of my money and you want me to put more money into it? You crazy is it? Okay, hear me out. There's a term called 1M65, created by a guy called Mr. Lu. Basically, he said that if both you and your partner each have $130,000 in combined balances of CPF, SA and MA at 30 years old, this amount can compound to $1 million by 65 years old. Like magic. So that's where 1M65 comes from. Trust me, the math is correct because I went to double check. Then you'll be like, but I can't access the money in my CPF until I become old Abed or old Ama. To which my answer is, yes, that's right. But the purpose of 1M65 is not so much about getting the money back tomorrow or about 1000x your money by 5 years time. Instead, it's about having a safety net. With at least 130k in your CPF for each couple, you know that the money will confirm plus chop reach $1 million by the time you reach 65 years old. Assuming CPF doesn't change the interest, yeah? Then, with this safety net, you can invest in high-risk stuff like the S&P 500, Nasdaq, individual stocks, or even go into trading and angel investing. Because even if all your other investments do badly, whether it's because you are noob in investing or the market crashes 90%, you can still fall back to your CPF during your old age. Third, improve your cash flow. Once you have prepared all your safety nets, the next step is to improve your cash flow. No money? No what big. On the expense side, cut off all the excess fat. For example, if you have high interest debt, anything more than 5%, they are bad debt. They will make you poor. So get rid of them as soon as possible. Review stuff like insurance plans and see if you can get a cheaper plan with the same benefits. Use SIM-only plans instead of those expensive phone plans that come with a phone. Go through all your subscriptions like Netflix, Disney+, Spotify, and gym membership and cut off those that you are no longer using. Also, if you are still not using a credit card by now, it's a good time to do so, yeah? If your expenses are low, you can use a no minimum spend card like the Citi Cashback Plus card, where you will already get 1.6% cashback on your expenses. If your expenses are high, then you can use something like UOB One Card, which gives 3.33% cashback with a $500 spend. These cashbacks may seem little, but if you add them all up over 1 year, you can easily buy 1 tin of baby milk. Not for you, for your kid of course. Also, don't forget that credit cards have super good sign-up gifts that's worth a few $100s. Free stuff is always good. On the other side, start increasing your income. There are a few ways to do so, like taking on extra tasks that help you gain more experience. Find out what's your boss' pain points and solve them. Eventually, your experience and value will go up, and the pay will increase too. Another advice is don't stay at the same position for too long. You either need to get promoted or change job every few years. A survey found that people who change jobs tend to get a higher pay. One more thing, if you want to increase your income exponentially, you need to get paid based on results. There are many ways to do so, but the easiest method is through the internet. You can do stuff like dropshipping or selling courses of stuff that you are good at, like baking course or language course. Or you can even be a YouTuber. Trust me, I'm something of a YouTuber myself. In summary, if you can reduce your expenses while increasing your income, you will end up with more money to invest, which brings me to my next point, investing. There's a famous saying, riches are made in recession, because after the market crashes super hard, they will go back up even harder. Since 1950, on average, bear markets have given a negative 33% loss. On the other hand, bull markets have given 279% return on average. Here's one thing to remember, only invest the money that you donate in the next 10 to 20 years. That's because nobody knows where the market will go in the short term. Even Warren Buffett Koko also don't know. But if you look over the long term, the market has always been going up because stonks. So what should you invest in? Depending on your risk appetite and preferences, you have a few options. If you are a lazy bum and don't want to manage your investments, just use a robo-advisor like Scythe and Endowus. All you need to do is shut up and take my money, and they will help you do the rest. For example, Scythe's Equity 100 invests in a lot of different ETFs, and they will rebalance the portfolio periodically. The downside of using a robo-advisor is that they have management fees. For example, Endowus fees are anywhere between 0.25% to 0.6%. Okay, if you want to save on fees, you can invest in something called ETFs, which is basically a basket of stocks, like a basket of US stocks or a basket of technology stocks. The benefit of investing in ETFs is that it's super duper diversified. For example, one popular ETF is the S&P 500 ETF, CSPX, which holds around 500 top companies in the US. So even if one or two companies are not doing well, you have all the rest to back you up. What this means is that you don't have to manage your investments if you are investing in ETFs. This leaves you with more time to do your stuff, like playing video games. Finally, you can invest in individual stocks. The risk is definitely much higher, but in return, it's possible to get a much higher return. My advice has always been the same. If you are new to investing, just invest in the top few companies like Apple, Microsoft, Amazon, Google, Tesla. The reason they are at the top is really simple. All these companies can grow very well, have strong moats, and a bright future. With that being said, investing in individual companies requires a lot of hard work, and not just if he likes the stock, then I like the stock. You need to study about the company, look through their financials, check what's their future plans, and so on. Okay, if you are new to investing, it's super hard to research about all this. You'll be like, PE ratio, earnings per share, what's that? Can eat one ah? So here's a pro tip. A good way to research about companies is through YouTube videos, blog articles, and forums. Because the people there are much more familiar about the company and they know what to look out for. But just a gentle reminder, don't just rely on the research alone. You still need to know exactly what you're investing in, because in the end, you are responsible for your own money. Also, don't try to time the market, because no one can time the market unless you are hardcore. The best days in the market usually happens right after a big market crash. And if you try to time the market but end up missing the best days, your return will be bad. For example, just by missing the best 5 days out of 40 years, your return will already be lower by 37%. So don't time the market, yeah? Finally, crypto. After all the USD Luna shenanigans and the entire crypto market going down, it certainly seems like crypto is going to die. But remember this is nothing new. Crypto burn and crash all the time, like how the uwu bird uwu all the time. Over 90% of crypto projects have already failed and many more will fall. But despite that, I'm still very bullish on crypto over the long term. The number of crypto wallets have only been going up. There are more and more crypto projects. More countries are starting to adopt crypto, and regulations will help to make crypto safer. So here's my tip. Only invest in the top crypto like Bitcoin and Ethereum and avoid all the rest. If you really invest in crypto, it's best to allocate a small amount, like 5 to 10% in your portfolio. If it does well, great, you hot big. But if not, at least you won't lose everything, yeah? Anyway, those are a few simple steps on how to invest in a recession. Hopefully, it helps you out. Like, share and subscribe as I'll be posting new videos every Monday, Wednesday and Friday.